Hi, this is Mike Lembeck with Remax Commercial, bringing you today's Let's Talk About It. Today's background is the flyover of the Bora Bora Islands. Real nice scenery with some crystal blue water, nice green trees, grass, a very beautiful location. Hope you enjoy it. All right, today's article is the Fannie Freddie are still providing attractive terms, but demand from borrowers has fallen. Not many multifamily investors are eager to take out acquisition or refinancing loans right now. As everyone knows, the interest rates have creeped up and doubled from what they were at this point last year. So quite a bit has changed since that, and not a lot of investors are eager to use the higher interest rates. So for multifamily investors that continue to rely on financing to close their deals, attractive loan terms are harder to find. Freddie Mac and Freddie Mac and Fannie Mae lenders can still offer a solution. So they are providing loans. They're one of the most prevalent lenders out there currently. So if you're looking to do any financing, that's probably where you're going to have your best rates. After all, the entities are meant to provide capital for multifamily market under various conditions, including a market that's currently experiencing uncertainty because of rising interest rates and the possibility of a recession. For many apartment properties, Freddie Mac and Fannie Mae are effectively the only attractive source of financing available. So that's again where you want to be looking to finance anything as far as a new purchase or even a refinance. As the Federal Reserve continued to raise interest rates by the last weeks of December, the yield on 10-year Treasury bonds was around 3.7%, up from around 1.1% at the beginning of the year. However, Freddie Mac and Fannie Mae lenders have not increased the amount they add to the all-in fixed interest rates they charge to their borrowers. Their spreads still range from 150 to 200 basis points over treasuries, which works out to be all-in rates ranging from 5.0 to 5.5%. And that is a relatively normal spread range. So there's where your current interest rates are, somewhere between 5 to 5.5% on multifamily financing. The next highlight we have coming up here is with interest rates rising and growing uncertainty about the broader economy, relatively few buyers need or want to take out new loans for apartment properties, particularly for refinancing or acquisitions. One of the lenders says that one of my members said 65% of their multifamily lending business has been refinance activity, but there are now virtually zero benefits to refinancing unless you have a loan maturing. So if you've got a loan that is maturing, of course, you're going to have to refinance that to pay off the previous loan, and you're going to be refinancing at a new rate or a new interest rate and potentially a lower loan to value. Investors who need to refinance loans at the end of their terms may face unexpected challenges. The interest rate for a new loan will probably be significantly higher than they expected. However, these properties are unlikely to face serious trouble because property values and rental incomes in the multifamily sector have also risen. Maturing loans can usually still be refinanced and cover the existing loan balance and then some. In some instances, there is a shortfall, and borrowers are looking for some capital infusion in the form of preferred equity. So, in some cases, there is potentially a loan to value problem depending on what the rents have done, and as far as what values have done. So there might be a shortfall there, and in that case, then there's going to have to be an influx of equity or money coming in order to get that loan to value enough high enough to where it'll pay off the old existing loan. What we're seeing a lot of in multifamily is not as big of a problem, but with the office buildings and having the loss in value that they've seen, that is becoming a problem. And potentially this year, we may see quite a bit of that occurring. So the next up on our highlight is Fannie Mae and Freddie Mac lenders also typically provide tens of billions of dollars in loans every year to investors buying apartment buildings. But since interest rates began to rise, the multifamily investment sales market has slowed down considerably. The bid-ask spread between buyers and sellers is pretty wide. So sellers are still trying to get the old pricing that they had from previous all the increases that in values that we had over the last 2-3 years, and buyers are hesitant still to pay that premium. So that's why we see a bit of a slowdown in our activity as far as sales go. Not only that, of course, we had the holiday season. Most buyers are not willing to pay the same prices they did a year ago because the cost of their capital has increased and there is relatively high chance of a recession next year. In turn, very few sellers are willing to bring their properties to market for sale. People are still, again, the sellers are pushing those values as much as they can. They want to keep those values up. Buyers, of course, want to buy at a lower price. If you're interested in looking at any of the loan rates, I have on my website, SoCalMultifamilyBroker.com/rates. You can see some of the past interest rates and where they were 6 months ago, 5 weeks ago, and where they are currently. So this is the cost of borrowing all the way from single family homes into the multifamily market, 5+ units, current interest rates or index rates on the 5-year, 7, 10-year treasuries, also multifamily with Freddie Mac and conventional, their loan to values, the spread, the rate that you're getting. So anything you want to see as far as interest rates go, you can find on my website, SoCalMultifamilyBroker.com/rates. If you need any other further information, I can put you in touch with the appropriate lenders to give you a quote, get you pre-qualified for purchase if that's what you're trying to do. So looking forward to hearing from you. I look forward to hearing from you and with any questions that you might have. Feel free to subscribe to my channel, Mike's Multifamily Minutes. Make sure you like and give a thumbs up to the video. And thanks for watching. Look forward to seeing you on the next one.